Snowed in.
Morning, everybody. It's the 2nd of Feb. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Ian Coleman. Morning, Ian.
Morning, mate. You right?
Yeah, not bad, thank you. Waiting for Steve. I'm not sure what he's up to this morning, but he'll
having a lie
join
in.
us. Yeah, he'll join us when he's ready, if he remembers. So, yeah, how are you doing, Ian? All good?
I'm all right, mate. You?
Yeah. So you've been snowed in up in Sheffield, have you?
Well, to a certain extent. We're used to us hardened northerners.
You're a soft southerner at heart.
Yeah, exactly. I can't get the car in, car out, so let's say I'm snowed in. But the main road's 10 yards down the road, and that's I can hear traffic, so it can't be that bad.
Okay, fair enough.
But, yes.
Cool. All right. Well, back to markets then. So still fun and games as the Reddit army continue to cause a bit of havoc in the markets yesterday. So silver was the new target, as we mentioned, and as a result, that came into full view on Monday. So a fairly substantial move for silver, up 10% on the day, far outstripping what gains we saw on gold.
I think we should note that we're 5% down today.
Yeah, so 5% down today, and there was a fairly substantial correction off of the highs yesterday as well. So, it was some pretty lumpy moves. Just try and get up a chart. Got so many squiggles on it.
Same.
There we go. So silver. This is a daily chart, as you can see. Decent move higher into this 29.85 region or $30 region, and the highest we had been for a while, going back to August 2020. And prior to that, we have to go some way back to find the highs on silver there. So, yeah, Steve's here.
Here he is.
Thanks. Well,
I think pressing the button at the same time. He's not got his ears on yet.
No. Yeah, so silver definitely lost some momentum, and I think there could be the new target has been established from the retail traders, and apparently it's going to be looking at these heavily shorted biotech firms.
Okay.
So that seems to be the next sector.
I noticed that the CEO from IG sent through an email this morning apologising for disruption in service, and basically said it was just from the amount of traffic that they're getting through at the moment, and they've stopped admitting new clients.
Yeah, that's which is
a big thing for a broker, because that's their main focus. Well, one of the main focuses is to get new clients on. So the platform basically is just being absolutely swamped with retail.
Yeah. And obviously they're all keen to be looking at these sort of handful of stocks that are very heavily shorted, the likes of the GameStops, the AMCs, and others. Quick look at those charts here. This is the daily chart on GameStop. As you can see, some wild looking candles over the last 4 trading sessions. 483 remains the high. Yesterday, some big swings in price as well. Highs of sort of 321 down to lows of 209. So what is that in terms of percentage swings we're talking about?
On a daily basis.
Like 30-35% swings. So, big moves.
The short position in game is apparently down to about 40%.
Okay, so some of them are folding. Well, a lot would have capitulated. It was over 200% at one stage, wasn't it?
Oh, I only saw it at 139, 140%.
I heard that big fund behind it had doubled down. So whether or not, you could argue then that this day here on the 28th was actually the shorts folding and them getting out. So maybe the story's run its course on that, and maybe the hedge funds have been squeezed out.
It did say in one report that they've managed to cover their cover the shorts. Yeah, cover the exposure. I don't know if they've hedged it against other things, but
so with the short interest, I don't think it's not a sort of a daily thing that's updated, is it? I think that it's only disclosed a couple of times a month, from what I read. I may be wrong. There may be other ways of accessing it now.
I think you can work it out from open interest and stuff like that. So it should be get one of these Super Fandango computers to work it out. It'd take me a little bit longer. But yeah, I think that Melvin Capital have sort of established their loss in it. I think they were still up on the month.
And the poor guy, the CEO of Robinhood, has got to go in front of Yellen, hasn't he?
Yeah.
I saw that this morning.
Yeah, it's exactly
28th of Feb or something.
I think it's a little bit like the IG scenario where people were complaining that obviously that they're not allowed to put on positions in GME and all these new traders coming on board who've got no idea about trading or no idea that they can actually lose all their money. And it's the same for Robinhood. There's a there is a sort of like a price to pay when the volatility gets that high. The platform can't just sort of like stand behind all the bets that are being made.
Yeah.
So I don't, from what I've read, they've done nothing wrong. But I don't know enough about it. I don't know the full facts, and the full facts will come out, I'm sure.
And it'll be a lot to do. Would it be a lot to do with their spreads? Because obviously you get high volatility, spreads go a lot wider, and they're a zero commission broker, aren't they? So that's how they make their money.
Yeah, well, I don't really know how their model works. So should I'll have a little bit of a read up about it, be a bit more, be able to comment a little bit further on that. But yeah, I think there's sort of there's obviously the rumor mill is that the CEO stopped the trading to help out his pals at Citadel, who provide the price feeds.
Oh, okay. I
so
didn't hear that one.
Yeah, that's the main reason.
A little bit different.
Yeah,
okay.
Well, that's it, and everyone gets carried away, and they all call conspiracy, or they say like foul play, but they don't understand trading or the markets enough to do that. But funny enough, they can get him in front of whoever he's got to go in front of a select committee. So yeah, I don't. Well, it'll come out. The truth will prevail.
Yeah, I mean, I was having a little scroll through Reddit yesterday, just on the Wall Street Bets page, and they're obviously following intra-second what's going on with these stocks, and it's just post after post of I've bought X amount of AMC, I've bought X amount of GME, and then you see the moves of the stock coming down. They're like, oh my god, I'm losing so much money on it, I don't know what to do. It's just like, oh my god, I can't keep watching this. It's
it's painful, isn't it?
Yeah.
That's the thing, is the last ones in are the ones that get burned.
Well, yeah, I mean, if the fund's out, if the fund's taken their medicine and unwound their short, then there's no play there anymore, is there?
I think there's still different. The main Reddit or the guy, the main trader who had a swear word in his name. I can't remember what his name was. I'm sure I'll remember it one day.
Do you have a cunt in there, or?
No, I don't think it did. I'm sure you imagine. Deep fucking value. His name was Cameron. Reminded me.
Yeah.
He was. I saw his position, and his position he had $12 calls, but they were April calls. So I mean, obviously he can sell out of the actual stock, get short the stock because he will be long at $12.
If he was hedging it out.
Yeah, just
hedging.
He could do. I doubt very much if he will. I don't know. And then he sort of like he's made his money, but if he just runs his position till April, I'm not sure if it'll be on side.
No, I mean they're all coming off, aren't they?
That could easily go all the way back to $20, even lower.
Yeah, other ones.
They always say. I mean,
as
far as Elliott Wave is concerned, and that has anybody read the book, The Next Big Investment Boom? And that's quite a decent book. But they always talk about, the fact that once the cabbie starts talking about it, and once the man in the pub, I mean, we're not getting cabs and we're not going down the pub at the moment, but once everybody starts talking about it,
it's the time get changed to once the Reddit reader starts talking about it.
It's time to get out, and it's.
It is, unfortunately, that's how it works. It's sort of, they had
feels like tulips.
Yeah, they had how many users that Wall Street Bets had, like 600,000 users or something. Then it's now 6 million users.
Oh fuck.
So yeah, it's when them, you get them sort of like last 5 million coming in. They're getting in they're getting in late. They still had an opportunity, and there was still an opportunity there to do it. But I imagine they probably did sort of get in close to the highs.
If there's any alpha, or any opportunity to make big money, then I'd imagine it would have been flooded by, robots and bigger hedge funds.
Yeah, I'm sure they've got their sort of like bearings on it now. Now that sort of like the hedge funds have sort of like got away with it. They've been burnt, no doubt, but they're still there.
Yeah.
And you know, I was just thinking about the other way around. It's what about all the long cryptocurrency holdings? I think like anything like that is like 96% long.
Yeah.
You've got to really worry when that goes over 100%. Yeah, that's the time for it to sort of like get smacked.
Yeah, possibly. Okay, well, that's enough chat on that. Let's get to the intraday markets and what we're seeing on the boring old indices and FX markets at the moment compared to obviously what's going on with these stocks. So
I think it's going to be a volatile day today. I'll go first if you don't mind.
Sure.
Because I've got a few things that are of interest and are moving now. So we basically yen products. For those that don't know, yen is a safe haven, and when stocks go down, yen gets bought. So that normally means that dollar yen goes down, sterling yen, Aussie yen, etc., etc., etc. We've got some interesting patterns this morning. So dollar yen was one that we've been focusing on this week, and we talked about this on a medium-term basis. This correction higher, and it can clearly be seen in 3 waves. And as far as Elliott wave is concerned, and this is daily chart, I would say that's a 4th wave correction, and then we head down in 5. And this is quite nice, which is the flag formation. So breakout of the flag. The actual measured move target is here, 105.15, but we're starting to turn over. And if we go to this time frame, which is the hourly chart, we're seeing a nice wedge breakout of this pattern. The measured move target is down here, so impulse move normally, maybe a little retest, and then a bit of consolidation, perhaps to make a head and shoulders. So this would be the left shoulder, head, flat line in here, then moving up to make a right shoulder, and then a move lower. So it looks like a risk-off day. And if you go to Euro Swiss, and I know we didn't get we sort of moved sideways mostly yesterday, but yesterday we said that this was a prime level. 108.31, 108.37 makes a cipher pattern, and we just clipped that this morning, and then we've posted this rather large engulfing candle. And Euro Swiss is also a risk off currency pair, again Swiss being the safe haven, so selling the euro to buy the Swiss as a safe haven. The one that's bucking the trend is the dollar, and of course we have seen quite a decent drive higher in the dollar over recent sessions. I can't really get any technical reason why I'd expect to see it moving lower. It has broken out of this channel formation, and then it's just breaking that back down. So and also you'd expect with the yen crosses, i.e. euro yen, sterling yen, Aussie yen, if they're driving lower, then normally euro dollar will drive lower, which will mean dollar index going higher, but that's not happening at the moment. So we have got a little bit of a mixed bag. But the fact that this was a pattern that I was looking for, and remember I said I don't want to be buying the rally up, I want to be selling on the completion. It's now broken this swing low, so even if we do get a correction higher, I think it's a case of getting rid of that and where are you, fib, and trying to find a decent fib, a correction to sell into. If it hits 50 on the first wave, then 88.6. If it hits 61.8% on the first wave, then you look at 78.6 to make these symmetrical patterns. And cable is again quite interesting. This is a short time frame, so it's an impulsive move to the upside. This looks like a correction higher, and if we go to both of these time frames, wedge formation on the 4-hour chart, and then even on the 8-hour chart, we've got a huge wedge formation. And again, I think we've redrawn this trend line about 6 times now. So it was once there, twice there, 3 times, 4 times, 5 times, 6 times we've redrawn it now. So again, I've got an alarm on here. If that if it gets to 137.33, that's a quite a decent trigger level. I use outside bars a lot with DMARC, and basically if it breaks that, then the negative bias that is given from that sell-off becomes null and void. So basically 137.33, I think it is. We've got an alarm there at 35. If it breaks that high, then it's broken. So that's actually your risk parameter on a rally, and that is your potential target. So the R on selling up there is quite good. Dollar Swiss, again, it's Swiss being a risk product. It's going to depend on what dominates risk between dollar and Swiss, and it looks like Swiss is winning this morning. Remember, this, I believe, is all corrective formation. So if we go to a bigger time frame, this is the weekly chart. I believe we've completed a 5-wave pattern. So all these short-term time frames start with 3-wave patterns. So what we would normally see is 1, 2, 3, then down in 3, and then an impulsive 5 up. So this could be the start of the corrective move. And like I said, it's not going to be dominated, I don't think, with dollar selling, but I think it's going to be dominated by Swiss buying. And again, like the yen products, we're getting outside bars, which highlight they're good reversal formations for these products. And again, dollar CAD, the dollar's being sold this morning. It still looks like some sort of bottoming formation. I don't know if we're going to sort of get a head and shoulders maybe here, something like that. So left shoulder, head, and then again corrective 3. So up in 3, down in 3, and then hopefully up in 5 as you get that impulse wave to the upside. Euro sterling, I've got nothing on, and like I said, a lot of the yen pairs have hit sort of decent fibs and look like they're going to drive lower this morning. That's me done.
Thank you, Ian. Steve, what are you seeing on the indices and the metals today?
Just indices, I'll just take a bit of a longer term look on it, and I'll just run through them. I've just drawn these sort of like channels, if you want, channels, wedges, they turn into everything. This is the FTSE, so this is from the sort of like last year's pandemic low, and this is a potential supportive trend line all the way down at the moment at 5,750. Not saying it's going to get there, just saying that's where the support is. And this looks almost like more of a channel than anything else. So there's sort of like, this is going to be a grind like normally that FTSE is. So I think it's quite important to know where the support is, where the sort of like longer term resistance is. We've got longer term resistance up here, and also we'll have Fibonacci resistance coming in up there as well. So jumping forward maybe a week or 2 weeks on the upside, around about 7,000 would be quite a decent resistance level. At the moment we're in this short-term move lower, so the supportive area for me would be more of a, let's get rid of this fib, more of a retracement from the highs, and I'm just trying to get something to line up maybe with the trend line, and that comes in around about 5,870. That'll be a 50% retracement of the up move. So that level, they're the sort of 2 real levels on the longer term charts to look out for. It gets a bit more interesting. Oh, let's keep that there. When we start to look at markets like the DAX, where it's definitely more of a wedge, and chart formations like this tend to, I suppose, if we get some sort of momentum indicator in there, and then it's not great. Let me just get rid of the ATR. But you can see that there is bearish divergence. That momentum is moving lower, while the prices are continuing to move higher. So over the long term, we've got that. Looking at it, well, let me just give the levels in there that we're really looking at. The upward trending resistance line is a lot stronger than the FTSE one, because it's got more than 2 points connected. It's 1, 2, 3. Almost can say, well, you can say 4 points connected. So that'll be a very strong upward trending resistance line. So that comes in today. It comes in at 13,813. No, it can't do. It can't do. That's where it's trading. I better sell it quick. 14,230. And the support line, which isn't quite as strong because you can say it's almost 2 points connected. I've just moved it above that spike low there to connect more than 2 points. So it's a little bit stronger. But there's only really, if we sort of like put it to the low of that session, the support really comes in at 12,700. And again, we could put Fibonacci lines on there, but for me, this is more of a wedge pattern, so more of a concern. The CAC, again, that's more of a wedge pattern than the FTSE, so a little bit cautious on there. The Dow, again, another wedge pattern with the bearish momentum, so bearish divergence taking place in this market, so beware. We had the low the other day at 29,660. A break of this trend line, because it is 3 points connected, would be very negative, and would also
say the measured move targets are fucking doomsday scenario, aren't they?
Exactly.
Again?
So
new lows.
This sort of acceleration, the way this market has moved up, has to have a correction. I'm not saying it's happening anytime soon, and there will be a big catalyst for it, but it does feel to me that the markets are growing a bit tired up here, hence the negative momentum for so long. Nasdaq is a little bit, I thought Nasdaq would be a lot more of a wedge, but it is like a little bit like the FTSE, a bit more of a channel. But again, we got quite close to we retested this upward potential trend line, and now it's formed a trend line, so it's a bit stronger. So that again has potential to sort of like continue up for a while. It's still got the bearish divergence, but and S&P's again more of a channel. So the Dow and the DAX for me are a little bit more susceptible to a pullback maybe than the FTSE and the Nasdaq and S&Ps. This is the Aussie 200. I don't know if I got down to the Nikkei. The China, completely different story. That's had, they're obviously their figures that they're posting show a fantastic recovery. So how can we argue with that? There's such a such a great productive nation of the world. That's what I was going to say.
Yeah.
That you've got to believe them. Why would they lie about it?
Okay.
A little bit of sarcasm there, maybe. You can read it how you want, but I know that sort of like special forces and the secret service in China are sort of quite hot and things like this. So I'm not going to say any more.
Yeah, fair enough. That's a really good roundup, Steve. Thank you very much for that. Okay, so let's have a look at the guns to the head stuff from yesterday. Steve, you have continued your winning run with another. No. Don't tell me you got stopped out yesterday.
I got stopped out yesterday.
Did you?
Yes.
It must have been close.
Yeah, it was very close. It was painfully close. I was actually sort of contemplating whether to just let you say I've won.
Oh, fuck's sake. All right, I'll change that then. So, stopped out. Right, so, Ian, you're the only one that had a win yesterday. Nice 4 ticks to the good on Euro Swiss come 9 o'clock.
I'll roll that into today.
Yeah, are you going to go again on the same market, are you?
No, but it is going.
Okay.
I'll have 2. Can I have 2?
Nope.
No.
We should be able to play a joker, surely.
You've been doing that for the Mulligan, haven't you?
So yeah, that's been me. Sorry about that.
That's the Mulligan.
We've been playing as Steve every day. Okay, let's get on with it. There was nothing to show yesterday. We had 2 losers and a small win. So back on the horse today. Ian, what you got?
Dolly in. Prime short entries, that little line there at 104.90, but we're not far off it now. 104.86. 104.86. I'm going to lower my stop actually. Greed. Targeting 104.61 with a stop at 104.94 gives me 3.37R.
Lovely. Steve, have you got anything yet?
No, but I'm sort of had a conversation with my son this morning, so I know what I'm going to do.
Is it silver?
No, it's not. It's gold.
Okay, I'm going to go silver then.
Yeah, you do that, and I'll just give a reason why I'm going to do gold.
Okay, so I'm looking at silver. This is obviously well spoken about at the moment. It's had a very strong move higher. This is the sort of impulse move that started around the 27th of Jan, up to those highs at 30.13, where it found resistance, and it's pulled back roughly to a 50% level just in front of 27.42. I've got a support level here from this high on the 29th, so I'm going to buy it at the market, which is 27.75, targeting a move back up to those highs with a stop loss below that big impulsive candle there, which is going to be at 26.94. So quite a wide stop. Just looking for just under 3R on that one today.
Cool.
Good luck. I'm just wondering if that's the reason why dollar's driving lower. Silver.
Possibly. I mean, I still think dollar's going to go up. I think we've got a nice inverse head and shoulders on that, and maybe just a bit of a pullback towards the neckline for another go. We'll see. Steve, what's your take on gold?
So at the moment, we're seeing this correction we've been in since August. It's continuing. I think sort of what happened in silver over the last couple of days has gave the gold an opportunity to rally higher. Just naturally, just because of the sort of like demand for silver, it's gone too high. Or what can we buy? We buy gold because that normally moves in tandem, and it hasn't done it. It sort of it retested at the 1870 level. I think it got to 1875, and it's failed. Now, this is a weekly chart. We're in this downward channel. I could bring that a little bit low to make it look a bit neater. But the momentum is stalling on this sell-off. So, long story short, I'm still bullish of gold overall, but I do believe we have to retest a couple of levels before we continue higher. That's what normally happens in markets. It doesn't go to the moon if anyone's watching from the Wall Street Bets. Yeah, it sort of does sometimes go in waves.
To the moon.
No, apparently I read it somewhere. I can't remember if it was the Daily Star or the Daily Mirror. But yeah, so we're in this on the daily chart. We've had this move lower. We had the spike lower overnight, which was formed a bullish hammer, which had a positive reaction to price, and price moved up, and as I say, retested this 1875 area. But I think we've got to retest this 1800 spike lower. I know it happened on a Sunday night when there's a lot less liquidity, but you tend to find that these prices do reattract. They act almost like magnets. Bearish momentum is stalling, so that's a positive sign. So we've got this slight positive channel on the daily chart, but potentially could be a bearish flag. So if we do break this flag, I would potentially, the measured move target is way down at 1733. Now, I don't think it will get that far. I think we've still got to play out this retracement that's going on in the longer term charts, and I think the level to watch is 1765 after the 1800 level. So for me, it puts me on a mid-term bearish slant. Again, I think I drew this on yesterday. I took out the 1800, the tail, the spike lower of that candle, and that's much more of a sort of basically a bearish flag. There's a measured move target down to 1788. So we're trading around about the Ichimoku cloud on the 4-hour chart. So I'll go to the hourly chart to get rid of that one. Look at that one. Look at that, Daddy. That was good, wasn't it? Can I do another one of those? Don't know.
I hope so.
So let me put it on the hourly chart. I'm going to sell gold. I've been chatting with my son this morning, he's
an expert now, is he? After a bit of time on Wall Street Bets?
Absolutely not. No, he understands that he's got his moany old dad saying, "What you doing?" So it's just a case of how greedy I'm going to get with the risk reward, and so based on normal track record, it doesn't work too well being too greedy. I'm going to put my stop. I saw that a very well-known competitor of ours on the IG platform actually had a trade idea selling this morning with a 1 to 2 risk reward. I'm going to try and go better than that. I'm going to try and go more than 2
risk, one reward.
It was, yeah. It was horrendous. We saw one on there yesterday, which was a 1 to 15 risk reward. So they were looking to make 50p by risking $15. No, 1 to 30 it was. Amazing, eh? So anyway, let's be a little bit sensible with the stop on this. So if I'm being sensible, I've got to put my stop at 1865, which I don't like because I just don't like it. I don't like it. And I'll put the target in at 18, coming in at around about 1820. So there, I'm getting short at 1849.28. My stop. Oh, that just looks so boring. All right, I've talked myself out of it, haven't I? 69.28. Sorry, 59.28. See, I can't do it. I'm so ill-disciplined. How's that? 3-to-1 risk reward.
What was the target? 1788.
The target was 1819.28, and the stop is at 1859.28. I'm short at 1849.28.
Okay, lovely. I think that was probably on record as the longest talking bull guns to the head trade ever.
Oh, get out of no. No, it wasn't, was it?
I don't know what you were waiting for. He's waiting to get a better entry or something.
No, I was waiting for it to go one side before I sort of like finished it.
That is lovely.
Desperate times, desperate measures.
Yeah, it's bloody hard trying to pick stuff at the moment, that's for sure. But okay, in terms of data today, all I can see of any high impact on the data is the Eurozone GDP at 10 a.m. this morning, so not long to wait for that. Expected to fall to 4.8% year on year and 2.2% quarter on quarter. Anything else you've seen, Ian, that we should be
only overnight? New Zealand unemployment or employment rate, and some building permits out of an RBA. Laos speaking as well overnight, so it's all overnight. So okay. Yeah, nothing else in the day basically. Fed's Williams, but I don't think that's really anything to rock the boat.
Okay, perfect. Well, I guess we can wrap it up there, guys. That was a pretty long one, but plenty going on in the markets at the moment. Good luck if you're trading, and be sensible. And we will be back in the morning.
Lovely.
Indeed. Enjoy it.
Cheers.
Cheers.
Bye. Bye.